Hello, I am Matt Klukas, President and CEO of Criterium Energy. Criterium Energy is an upstream energy company focused on the Southeast Asia region, a region where we've already established a portfolio of assets with organic value creation opportunities. It's also a region with lots of opportunity for inorganic growth, where we see the right conditions for the right companies to establish themselves as operators. Today, we'll be discussing our preliminary 2024 results, Q4 results, and provide an operational update. This presentation and corresponding press release can also be found on our website at criteriumenergy.com. Just note the disclaimer and key terms here. This is available online on our presentation. I will be making forward-looking statements today. And just also to note that all dollar amounts in this presentation are in US dollars. For us, this is where we realize all of our revenue, with the majority of our expenses being in Canadian dollars and Indonesian rupiah, but everything here will be expressed in US dollars. Introducing Criterium Energy. As I said, we're focused in a favorable market of Southeast Asia, a region with high energy demand, supportive governments that are incentivizing domestic production, and limited capable operators to deliver on this production. We have acquired and will continue to acquire undercapitalized assets with a focus on cash flow from production that can be brought online and scaled up cost effectively. In many cases, this is due to our proximity to underutilized infrastructure, so being able to increase production without the significant capital costs associated with greenfield developments. And finally, we're executing a low risk and high return strategy. This is demonstrated by our flagship asset, the Tonkal PSC, which we acquired in January in 2024. Here we've increased production 30% over that year and reduced operating costs by 20%. As we continue to increase our operating margins in our oil production, we'll also focus on the strategic development of high margin gas fields, which I'll talk about. But this has the opportunity to more than double our production when we bring those online in the very near term. Just focusing on Southeast Asia. Why are we in Southeast Asia? And there's a lot of tailwinds for the energy sector here. This is largely driven by growing populations with disposable income. One interesting stat is, in Southeast Asia, the entire middle class will eclipse the entire population of the United States. So this population growth, this economic growth leads to energy demand growth. And this is really putting the pressure on domestic governments to meet this. And in the middle here, you see the Indonesian government has publicly gone out and stated the need to essentially double domestic oil and gas production to meet some of this demand. And so we're there to support that. We're there to work with the Indonesian government and with the governments of Southeast Asia to meet their domestic demand targets, or domestic supply targets. Rising demand, need for more supply. Of course, this results in premium oil and gas pricing. Our oil that we sell receives a premium to Brent in US dollars, as well as our gas will receive a very high price as well. And this is relative to indexes like Henry Hub. And typically here we'll see gas sold into a fixed take or pay contract, which allows us to produce at a very high margin. Here's our portfolio. It's a diverse portfolio. It's currently focused in Indonesia, and we produce roughly about 1,000 barrels a day today. We hold reserves and resources in oil and gas, with our current production and reserve base being 100% oil, but long-term resource potential more weighted towards gas. So starting in South Sumatra, we have the Tonkal PSC, which is 100% owned and operated by Criterium. Here we generate all our production from 2 oil fields, and we're surrounded by gas discoveries. So we'll look to continue to invest in our oil production there while also accelerating the development and first gas of these gas discoveries. So you see a lot of the focus of what I'll talk about today, and a lot of our capital program in 2025 will be focused on the Tonkal PSC. The Bulu PSC we acquired in December 2022. We own a 42.5% non-operated interest. We announced the divestment, or the intended divestment of this asset in May of 2024, and we're currently working with the buyer to see that transaction successfully close. And finally, in Eastern Indonesia, we have the West Salawati PSC. This is 100% owned and operated by Criterium as well. Here we have development and exploration optionality. And when we think of West Salawati, we like to characterize it as great geology and even better fiscal terms. We have a very large cost recovery pool that allows that any production we bring on, we're able to produce at high margins and quickly, and payback is accelerated. But as mentioned, today I will focus on the Tunkal PSC, again, where we derive 100% of our production from. Here, growth is from three distinct levers. The first being existing production growth from the Mengope field, which is located in the western part of the PSC, and the PLT field, which is in the northeast part of the PSC. Collectively, we saw production growth of 30% in 2024 from these two fields, highlighted by a 65% growth in the Mengope field. The second lever is gas developments, and you'll notice specifically around the Mengope field, we're surrounded by gas discoveries. And these gas discoveries were all made in the early to mid 2000s, sometimes even well before that. And this was a time when there was not a developed gas market here, nor was there infrastructure in place. But since that time, we fast forward 15, 20 years to where we are today, we've seen that infrastructure be built out towards us, which is now underutilized and in need of capacity or need of natural gas. And we've also seen the market for natural gas in Indonesia and the region expand as well. So we now find ourselves with these gas developments commercially in the right time, in the right place. And lucky for us, these wells have already been drilled in many cases. Well, they've all been drilled and in many cases have been tested at commercial rates. Our gas development will focus initially on the southeast Mengope field, which is the most proximal to infrastructure and most proximal to our Mengope field. And then we'll look to expand to the other gas discoveries from there and bring those on incrementally. So lots of potential there in gas. Again, our long-term vision for the company here is continue to grow our oil production and then bring on more material gas developments as well, ultimately getting to a point where we produce more gas than oil. The final lever is high impact step out development and low risk exploration. You can see, and these are these orange prospects and leads throughout the PSC. We do have a material prospect inventory. All are fully defined on 2D seismic. And most notably is Chera, which is located underneath this underutilized gas pipeline. Again, a well that was drilled during a time when gas didn't have value. We believe they drilled right through a gas-bearing zone, and it has not been tested, but there's evidence that there's a significant gas column there. And so what we'll do is we'll look to progress that, potentially testing the well and moving that from prospective resource where it sits right now, kind of up the resource and reserve ladder. Our Q4 concluded a very successful year for Criterium, in which we established ourselves as a responsible operator in Indonesia. Our key highlights were progressing the gas development. We completed and finished our workover program in the Mengope field, and we further reduced operating costs. I'll touch on the workovers and production and the operating costs on the following slide. But here I'd just really like to highlight two key milestones with the Southeast Mengope development. And this is a development that we're increasingly excited about because it has the opportunity to potentially add up to or over 6 million cubic feet a day, which is equivalent to 1,000 barrels of oil equivalent per day, essentially doubling our production. But the two key milestones we achieved in this quarter were signing a memorandum of understanding, or an MOU, with a company called Blue Energy. And Blue Energy utilizes this micro LNG technology, and we're investigating how this can be used to lower the upfront capital requirements and accelerate the timeline to bring Southeast Mengope gas to market and start generating revenue. The second key milestone was receiving technical approval to include the Southeast Mengope field into the existing plan of development for our Mengope oil field. Typically, what this means is we took a regulatory process that typically in the past would take up 9 months, and we've condensed that down to roughly just over a month. And this is evidence. It shows how we can work with the government of Indonesia. The government of Indonesia is working with us to remove red tape, to help us and to incentivize us to bring these discovered resources online and increase domestic production. Driving production growth, 33% comparing Q4 from 2023 to Q4 2024. This is really from a very successful workover program. Here we completed 15 in total. The last 4 were completed in December, and so aren't actually really reflected in this production growth chart, and also aren't reflected in our return numbers here. So of the first 11 workovers, we spent $600,000 and generated $3 million incremental cash flow. Very quick payback on these, and we look to continue executing these workovers through 2025. But you can see on the bottom right there of this slide, our monthly average production continues to increase. In January 2025, now we start seeing the impact of that last tranche of workovers that were conducted in December. To establish ourselves as a reputable operator, we know we can't just focus on production. A big part of this is being a low-cost operator, and here we're on the right track. And I think this was something that we focused on fairly early on after we acquired the Mount Dore assets in early 2024. We've achieved a 20% reduction, and this includes corporate and G&A costs as well as direct operating costs. You can notice the big jump there from Q2 to Q3. This is largely a result of 2 things. One, the suspension of a well in West Salawati, so over in eastern Indonesia. This realizes significant cost savings, but also, and has really no material impact on production. The second was transitioning from diesel used for power generation to natural gas that we produce essentially as a byproduct in our oil production. And this saves a lot. And we see more room to grow and more savings available that we'll look to continue to execute. But cost control measures were important to us. And really now we're starting to see we've taken a lot of the larger items out of our operating costs that we see, and now it's just focusing on these incremental control measures to continue to see a downward trend in our unit costs. Increasing production, lowering operating costs. Naturally, we expect to see an increase in operating netbacks. This is a close to 80% increase year on year or quarter on from the start of the year to the end of the year. And this is all in we had some headwinds from a declining commodity price. So we're still able to increase netbacks, again, largely on the back of reducing those operating costs. And I think this is also, we know this is also reflective of the underutilized facilities at Mengope and PLT. And watch this number as we continue to grow production, both on the oil and gas side, because associated with with underutilized infrastructure, often you have a higher fixed cost than in other operations. And as we overcome that fixed cost, which we believe sits kind of around the 850 barrel a day, now we can really start achieving economies of scale. So as you see the production growth, watch this number continue to increase. And of course, we're supported by the premium pricing that we receive for our oil in this market. So finally, to bring it all together, we have the right assets and the right team to deliver on value creation. In 2024, we demonstrated this. Our successful workover program increased production. We have multiple infill locations to continue oil production growth, and also have the ability to diversify and further grow our production by bringing on the development of our gas resources. And again, the gas development, starting with Southeast Mengope and then expanding to some of the other fields and discoveries we have in the PSC, is something we're really excited about and really focused on here in 2025. And finally, we have step-out exploration optionality in Tunkal and West Salawati. The important thing to note here, proximity to infrastructure gives us a high chance of commercial success. So anything we find, very high likelihood that we're able to produce it. Our minimum economic field size is very low. So for more information, please visit our website. You can find a link to this video, our latest presentations, as well as corporate press releases and other material. Really thank you for your attention, and we look forward to our next opportunity to update you about Criterium Energy and what we're going to look to do and accomplish in 2025. Thank you.